analysis. That's the market master's voice, but now we turn micro and get a bunch of corporates which have announced numbers. First, joining us from the corporate list is Mr. Kishor Patil, the co-founder, CEO and managing director at KPIT Technologies. Good morning, Mr. Patil. Well, you all had warned and the revenues have fallen by 3.3% quarter on quarter. Can you guide us in terms of what we should expect in the coming quarters? Is all the bad news that you guided done, and should we start seeing an improvement in the current quarter?
Yeah, so after our weak quarter four, we had laid down our roadmap for the profitable growth of the company, and we are on that path. So during this quarter, importantly, our services revenue grew more than 3% quarter on quarter, which is very important because services revenue is the most stable from that perspective.
Okay.
From the project, our revenue from the products, which actually went down, which are in line with the seasonality of that product. So we are not worried about that. So our main objective was our services revenue come back. We focus on our profitability. We focus on our operational excellence. We sort out, cost structures. So I think we are on the right path on that, right path in line with our business plan. So I do believe that we will, as we had mentioned last time, we'll start seeing the impact of that quarter on quarter. The full impact will be shown in quarter three, and certainly will return to growth from the next quarter.
Mr. Patil, morning. Just wanted to talk a little bit about the margins, because what the street has liked this time around is the fact that your margins have rebounded from 4% last quarter to about 9.5% this quarter. What is a sustainable level going ahead, given that you have the wage hikes next quarter as well?
Yeah, I mean, there are some wage hikes next week, but we'll try to neutralize to some extent by bringing growth. But certainly, as we said, we believe that we'll get to double-digit growth, margins post quarter three, certainly.
Okay, post quarter three. So the current quarter, the July-September quarter, will still have pressure on margins and revenues. I mean, we should still see a slip below the quarter one.
I'm not saying that. What I'm saying is we are not guiding right now. We are taking our time for 2 quarters. That's what we had asked everyone, that be patient with us. The quarter three will show you the results. Quarter two, I'm saying that there will be certain, what you can say, there are going to be salary hikes, but certainly it will get offset both due to growth as well as very marginal impact of certain cost reductions we have done.
Okay. You spoke about the services revenues growing by about 3% this time around. What is the outlook for the next couple of quarters on that front?
So overall, we see a growth momentum in the services business. We believe SAP business has grown in this last quarter, and we expect that to grow in next few quarters. We believe our JD growth to be fine. We mainly believe that engineering services business will grow, and that will be really growth engine for us. Products and platform, we expect to do better and better in the rest of the year. And naturally, the other areas are IMS and digital, which are small for us right now, but we see a very good traction in both these areas.
Yes, that's what we have been asking all technology companies, and I asked you the same thing. How much is digital contributing, and how are you investing and expecting it to do for the remaining part of the year?
So I do not want to give a particular number, but the one thing I can tell you is there are 2 areas where we see 2 or 3 areas where we see a major traction in that. One is IoT, which is Internet of Things. We see a good traction there. Second, we see a good traction in terms of analytics part. And the third, we see a major area is basically in the cloud, both in terms of application and infrastructure. So these are the 3 areas we see. We see a large part of our growth, both from the ERPs and the application maintenance coming from these areas.
Okay. Another metric that has improved for you is your utilization level. So this time on-site has improved to 87.1 and off-site has improved to 66.4%. Do you expect better levels in the quarters to come?
Certainly. I mean, that's a major lever for us. We believe that our offshore, our utilization can be improved substantially. And as we said, that you will see a more better impact of that in Q3. This quarter, while there were tightening on that front, but also this quarter and the next quarter, we also take a lot of freshers from the colleges, and we would like to continue that in order to put our cost structures in place and really be ready for the future projects. So we would not like to cut down on that. But overall, you will see the tightening of this in Q3 and Q4.
All right. We'll leave it at that, Mr. Patil. Thank you very much for joining us. You have given us to expect a lot from Q3 and Q4, and we will look forward to that. The stock also has been enthused by that statement, I think, and we are